Hi everyone. Today we're going to talk about the stock score, a feature that helps you create your own scoring system to identify the best performing stocks based on the metrics that matter most to you. With the score, you can select any combination of financial metrics. For example, earnings momentum, price to earnings ratio, return on equity. Each metric can be weighted according to your own priorities. Let's take debt to equity ratio. As an example, this metric compares a company's total debt to its shareholder equity and shows how much of the business is financed through borrowing. Here, we'll use the annual value since it gives a broader picture of a company's financial stability over the year. A lower annual value is usually better because it indicates less debt and a stronger balance sheet. For return on equity, a higher value shows stronger profitability. For the price to earnings ratio, lower is preferred, and for earnings momentum, higher is better. Once you've selected your metrics, you can assign weights to each, say 25% for every factor for a total of 100%, or you can adjust them individually. For instance, you might give 30% to return on equity and 20% to price to earnings ratio as long as the total remains 100%. After setting your criteria, you simply run the score. The system then calculates a combined score for every stock and presents the results in a clean, organized layout. At the top, you'll see the stocks that perform best according to the weights and metrics you defined. For example, the system might highlight LifeMD Incorporated and Avadel Pharmaceuticals Public Limited Company as top performers. Each metric you chose is represented as a separate column in the table, shown in gray. Now, let's try to sort by price to earnings ratio. We can go back to the screener and apply a filter to include only stocks with a positive price to earnings ratio. Then we return to the stock score to recalculate the scores with this filtered list. Now let's see if we get better names. By filtering out stocks with negative price to earnings ratios, we focus only on stronger candidates. For example, we might find a company with a price to earnings ratio of around 3.34 and a very low debt to equity ratio. It may be a smaller cap stock with a lower share price, but it still fits our criteria and scores well overall. The stock scorer is a powerful, flexible tool that lets you design your own ranking model. It doesn't just screen stocks, it analyzes and scores them across multiple dimensions, balancing all the metrics you've selected. This helps you quickly identify the best opportunities according to your own investment logic, without relying on a single indicator or predefined filter. Thank you for watching. Enjoy the platform and don't forget to do your own research.